Hey everybody, welcome to Bald Guy Money. I am Bald Guy and today I am answering your questions. Please remember that none of this is advice and hit the like button right now if you could, just to let YouTube know that you like my content and you think more people should see it. Okay, so not to waste any time, let's get right into it. And we have a great first question, the headline question from a viewer that calls themselves Trike Patrol. And Trike Patrol asks, what do you think is happening with the price of silver? We started going up and now it's coming down again. Is this proof of manipulation? Thank you so much for your question. And what I want to start off by saying is no, this is not proof of silver price manipulation. If anything, this just shows us what investor psychology looks like, especially when you're talking about going up against a lot of traders that are hired by banks. So we're talking about professional traders. And this is why. If we take a look at this silver chart, you'll see, and as I mentioned, it's really investor psychology at play. And what I mean is that as the price of silver came down, we found a price that people thought was attractive to buy it at. So a place that people thought was a bottom for silver. And that is this level here around the $18.40 mark. And that is what we call the support level. And as people started buying silver at the support level, the price started to move up because the price is determined, of course, by supply and demand. So the more people buying shows more demand, which means the price is going to move up. As the price moved up, we found the first resistance level. We pulled back a little bit, took a breather, and then we reached a new resistance level here. And this is a level that people started to sell into, so a strength that people sold into in order to take profits on trades they opened at those lower levels, which we called, again, the support levels. And as they started to sell off at those resistance levels, it drove the price down again. And this is a very good lesson in how trading works and shows the psychology of people, especially people who are working at large banks, who are hired to buy silver at those local bottoms or at those support levels and then sell them as they move up into those resistance levels. That said, I think a lot of people got overly excited by a small recovery in the price of silver. And I want to remind everybody about this. And I showed this in an earlier silver price video that I did. And what I said in that video is that the price will not recover until manufacturing does. And I want to take a moment to reiterate my position on the price of silver and say that we are in a bear market still. And we can expect the price of silver to come back even more, potentially down to that $17 price level I mentioned some time ago. So, in short, just to answer your question, no, this is not proof of silver price manipulation, and I do think that there is still a little more downside to go on silver, even if we experience a couple bounce backs in between. So thank you so much for your question. I hope that answers it. Moving on to the next one. And this one comes from God's Money. And I suppose this person is a fan of Robert Kiyosaki. And God's Money asks, have you considered premium increases when silver goes down? So thank you so much, God's Money, for your question. And it's a great one. And what I want to say is that I believe that as a percentage, the premium that people are going to be paying on silver as the price comes down is going to increase. Nominally, the price of the silver you're buying is still going to decrease, but as a percentage, that premium that you're paying on the price of silver is definitely going to increase. And I can also say that I think this is going to be a permanent element of silver bullion purchases in the future, even as the price starts to increase, and this is why. Because we've seen since the C-19 pandemic, when there was a little bit of a supply disruption with respect to silver bullion on the market, we've seen dealers take higher premiums on silver, and it actually hasn't impacted so much the demand side from silver stackers in particular. And what I want to say is, if you were a silver dealer or a bullion dealer dealing in gold and silver, what is your incentive to lower that premium moving forward? There isn't really much of an incentive, knowing that the person on the other side of the counter who you're selling that silver to is absolutely willing to pay that premium. So what I can say is, as the price comes down, I expect the silver premiums to increase as a percentage of the price that you're paying. That's number one. Number two is, I think that these higher silver premiums are here to stay, based on the behavior of many silver stackers who have shown a willingness to pay those higher silver premiums. I hope that answers your question. Moving on to the next one. And this one comes from Silver Delta. What is the split between male and female stackers? So the best data I can offer up here to answer your question is actually from the analytics of my channel. And here's what that looks like. And I'm showing you here the split between my male and female viewers, as well as the age groups that view my channel. And since this is a precious metals focused channel, I think these numbers are probably pretty representative of how this split exists amongst people within the stacker community. That said, we can see that about 91% of my viewers are male and 9% of my viewers are female. So I think it's safe to say that for every one female stacker, there are about 10 male stackers. Now, as it breaks down with respect to age, you can actually see that there is a little bit more of an even split between the adult age groups that are watching my channel. In fact, I was actually quite surprised that there is so much interest from the 24 to 34-year-old group, which is often stereotypically associated with investing in crypto. And I think that is a fantastic sign for the future of precious metals. That said, the majority of my viewers are, of course, from the 45 to 64-year-old age group. And if I have to give my opinion here, I simply think that is a matter of experience and people understanding how important precious metals are as a hard physical asset. So thanks for the question. Now let's move on to the next one. And this one comes from Tata Gata. And Tata Gata asks, how much more downside can we expect on silver? How does the cost of mining silver impact that? Great question. And I've been saying for a long time now, at least since April or May, that we can expect to see $17 per ounce silver. And I stick by those numbers. Now, does that mean that we can't go lower, that there's no more downside from $17? No, that's not what that means. There is absolutely room for us to enter the $14 per ounce territory. Now, you also asked about the cost of mining and its impact on the price of silver. And that's very interesting because if we take a look here, considering the fact that $12 is the ballpark or rough cost of mining an ounce of silver today, and that includes, by the way, byproduct supply. And if we look at this 5-year chart that I'm showing you here, we can see the absolute low for silver, which we reached at the bottom of the C19 crash, is around the break-even point for mining silver, and that was around $12.60 per ounce. So do I think silver can go lower than the cost to mine it? My immediate answer is absolutely not. But if you hold tight, I sincerely think we should start to get past this in the next 12 months. So as I said, hold tight till then. As we start to recover in manufacturing and recover from this recession, the price of silver will subsequently recover. And as I said, that will likely take another 12 months. Moving on to the next question, and this one comes from John. And John asks, I am new to this. Where should I buy gold and silver? I checked some of the larger sites and they want a minimum investment of $25,000 or $50,000 as an initial investment. I can't do that. So John, the way I see it is you're probably looking at online trading houses that do require a minimum amount of investment in order to open an account on those platforms. And please correct me in the comments if I'm wrong. What I can say is that a lot of people here, my viewers, who are interested in stacking precious metals, owning gold, owning silver, are actually buying it in the physical form from websites like AppMex, but there are many others, and I encourage everybody watching this video right now to put in the comments section. Let's help John out. Please put in your favorite sources to purchase your physical silver and gold bullion. Let's help him out. Let's let him know as a community where we like to buy it. Moving on, and now a question that I received from a viewer who is named Mohammed Tawfiq. And Mohammed Tawfiq asks, I saw your post on Instagram about the stock you said you were buying in a video 2 months ago, Invite. It tripled in price. You said to take profits on this trade. Is that because you think the stock market is going to go back down? How will that affect gold and silver and real estate? So thanks for your question, Tawfiq, and thanks for following me on Instagram. And how I want to answer it is like this. Let's pull up that chart of Invite. So this is actually going to be a two-part answer, and it goes like this. Looking at the chart, we see that I was actually right to urge people to take profits. When there is a huge rip or a run-up like this in the price, smart people will take some money off of the table. And that ties back to the trader psychology that I mentioned in the first question. And this undoubtedly causes the price to come back down. So on the first part of the answer, I say don't fight the inevitable. If something like this happens where the price rips up 300%, 400%, I say take a little bit off the top, because nobody ever went broke taking profits, and that's a line I stole actually from Rob Wolf from Digital Asset News. Now, on the stock market, I do believe we are headed towards a double bottom. So all the gains we've gotten from the S&P 500 over the last 6-7 weeks are going to be given back, and we are going back down to that 3,800 level, which is actually a 25% pullback, the exact level that I said we would pull back in my October video covering the stock market crash, what I called facts, because at the time a lot of people were calling for the greatest crash in the history of the world, and there are still a lot of people saying that this second leg down, so the second pullback, is actually going to result in that. Now, from my point of view, there's just too much inflation baked into the economy, and as a result, the valuation of companies have to reflect that somehow. So in real terms, I would say a lot of these people are right. But when we adjust for inflation, we're talking about hitting back at that 3,800 level. So I would be very careful in building up a larger stock portfolio right now, because the pullback, the second leg down, has just started. Now, how does this affect gold and silver and real estate? I would say that my point of view on silver has been made very clear in this video. I think we're going to pull back down to the $17 level. With respect to gold, I think that we could go a little bit lower from where we are now, but I don't expect us to go much lower than 1650, which as a percentage is actually not as much as the pullback we're going to experience on silver. And with respect to your question on real estate, I've mentioned this in past videos. I think there is going to be a general 10% pullback in the price of real estate. In fact, we're already starting to see that in a lot of markets. But the markets that were the hottest during the C19 period, so we're talking about, again, I've said this in many videos, European capital cities. If you're talking about a lot of the cities in the United States that people were moving to, like Austin, Texas, I think is a fantastic example for that. I think you're going to see larger pullbacks there, meaning that in those more rural areas, you're going to see less of a pullback, maybe in the 5% range. And as a total real estate pullback, you're probably only going to see at the macro level about 10%. And I've covered this in past videos, but that's how I see it. Thanks again for your question. Moving on to the next one. And this one comes from KS Coins, and this is actually a very dear viewer from Kansas. And Kansas Coins asks, Dearest Mr. Bald, with respect, how do electric cars and Bitcoin work in a SHTF situation? So that is a situation where everything goes to all hell. Not even a full-blown one. What about famous California blackouts? If anyone's grid was down for 2 weeks, no internet. Great question from a loyal viewer and regular commenter. And the truth is, actually, I see this question a lot within the metal stacker community. And here's my simple answer. Bitcoin and electric cars can only be really permanently killed by a permanent blackout. And that is something that has actually never happened and is highly unlikely considering how many people get their own green energy off of the grid in the 21st century. So with respect to that, I think that's actually a very unlikely scenario. Now, this next part, and I really want to stress, because if something like that did happen, I mean, I'm going to humor you on this one. Let's say it does happen. The internet and electricity goes out everywhere around the world, even though I don't think it's very likely. Our problems are actually going to be a lot larger than whether or not Bitcoin works or whether or not I can drive my electric car. And the reason for that is, number one, the entire banking system is not going to work, okay? Because all banking records now are digital and transactions are digital. So, I mean, say goodbye to the banking system. Number two, if you are somebody who is in a hospital that relies on a machine for life, I'm sorry, but that's going to be the end of that. Or if you're somebody with an illness, for example, if you're somebody who goes for kidney dialysis, that is no longer going to be possible. So you're going to see a large amount of death if something like that happens. And probably one of the most scary things is that nuclear sites, so sites that are holding nuclear radioactive material, are actually going to become destabilized and become unsafe. So when we're talking about one of those SHTF, so all things go to hell situations, I try to put it in focus and I say, really, do I need to be worried about Bitcoin or electric cars in this situation? Or do I simply need to be worried about surviving and the survival of my loved ones? Because let me be perfectly clear. If that happens, everything you own that is not either edible or somehow protecting you from the elements is going to be absolutely worthless. So I just want to put that into focus for everybody, that things like Bitcoin and electric cars in a situation like that are going to be the absolute least important thing. Staying alive, finding things to eat, and having shelter, that is going, and staying safe from people, because I assume something like that would lead to some kind of groups of bandits, going around cleaning people out. So again, like I said, keep things in focus and let's not over exaggerate on the importance of something in some of these extreme situations, because in an extreme situation like that, like I said, you're more focused on survival than the value of any asset you have. Now, with that said, we have to play the odds, especially when we're allocating capital to invest in something or to protect our savings. And that's why I always think having some gold and silver is fantastic. But why do I think things like Bitcoin or electric cars are also good to have a little bit of capital allocated in? Well, I'll put it like this. When we're looking at the odds that we'll live in a future that is more electric and more digital is actually much higher than the odds we're going to return to the Stone Age. And again, I say that with respect, Kansas Coins, because I think the odds of us returning to a Stone Age, which is kind of the scenario you're describing, is very unlikely. And based on the odds, the higher odds that we're going to a future that is more digital and more electric, which is a trend that's been established for 30 years now, I think that's why I always stress, as well as having some silver and gold, that having a little bit of a stake in Bitcoin as well as a green future like electric cars is very important, because, and this is not advice, because if you are an early investor in those two things, come 10, 15, 20 years from now, there are going to be huge, real financial rewards for you to reap from that. So again, thank you so much for your question. I appreciate you being a member of the community, and keep them coming. Moving on to the next question. And this one comes from Melody K. And Melody asks, if we switch to CBDC, will metals even matter? How would one convert if everything is tracked? Excellent question here, and I'm going to give a very simple response. And I'm going to say, first of all, CBDC, which is central backed digital currency, or these kind of government cryptos that we're going to have instead of paper money in our pocket, this is actually just another form of fiat money that can be inflated and debased, and the value of it is going to decrease over time. And that is why I think there will still very much be a place for metals in the future, especially in a CBDC world. Now, with respect to actually using your CBDC to buy metals, again, I don't think there's going to be much difficulty in that. Already, there are many people who are doing digital transactions to purchase silver and gold from online dealers like AppMex. And again, this is something already that's a reality, digital transactions in order to get metals. Therefore, I don't expect much disruption to happen on this as a result of CBDCs. Thanks for asking, and I hope that answered your question. Moving on to the next one. This one comes from Carepray Lift Chair. Okay. I'm definitely in the top 20%. This is actually a comment under my gold video, shading closer to the 5%. However, mines do produce gold and silver each year. Does that up the amount needed to keep top tier status, and how much per year to maintain the level? So with respect to gold, it's a very straightforward answer. It's about 1.7%. And this is why I always say, as a very good rule of thumb, to keep yourself, especially if you're benchmarking yourself versus other stackers, to keep yourself at that high elite level, should you have found yourself in an elite level, in my top silver and gold owners videos, I think it's a good idea to add about 2% minimum to your stack every year if you can afford that. That way, at least relative to what is being pulled out of the ground, you are keeping pace with that. That is the last question in my Q&A. I really hope you all enjoyed it. It was a really tough and technical one to get through. If you have any questions, please drop them in the comments now. Don't forget to drop me a like. Thank you for making it this far, and I do hope to see you in the next one. Adios, everybody. Till next time.